the Harmonic Patterns 5-0 pattern lesson. In this lesson, we will tackle a 5-point pattern. Much like the Batten-Gartley pattern, the 5-0 pattern is considered a retracement pattern. This means we are taking advantage of a retracement within the pattern itself. However, this is a much different retracement pattern than the Batten or Gartley. This pattern requires a reciprocal ABCD measurement to define the pattern's completion. Now, this is different than the traditional ABCD measurement, but we will get to this later. In addition, the 5-0 pattern typically represents the first pullback in a significant trend reversal. We will get to all this throughout this lesson, as well as defining the pattern and showing you the best ways to trade it. Before we define this overall pattern, let's start with the reciprocal ABCD pattern. Now, the 5-0 pattern incorporates a new type of ABCD measurement, the reciprocal ABCD pattern. A reciprocal ABCD pattern is typically a shorter counter move of equal length within a longer trend. They look like a lazy Z or an S. So this reciprocal pattern is a great tool for us to find completion, but will not be as vital as the 50% retracement of the BC leg. So you can see it here on the screen in purple. Now that on this one you have the A to B, the B to C, and the C to D. Now the A to B and the C to D should be equal length moves. Typically we've seen where the longer legs are equal length moves, but in this one we've flipped it, so we've taken its reciprocal, and the A to B and the C to D are shorter length moves, with the BC being the longer trend in this. Okay, so now that we know what a reciprocal ABCD pattern looks like, let's actually define this pattern. You'll notice that if you've traded other patterns before, that we have a fifth point in this pattern. So we have the 0 point. We usually go XA, BC, CD. So we usually have a 4-point pattern, but this one we have a 5. So the 0 to X leg represents an extended trend. So the X point will act as the trend's new low. Okay, the X to A would represent a quick bounce from that recent low. A to B, after that quick bounce, we would get a continuation of the trend. The X to A projection defines the B point, and it cannot exceed the 1.618. Okay, so we can go from 1.13, but we cannot go further than the 1.618. So any extension greater than the 1.618 will negate this structure, as a smaller impulse moves are preferred. Alright, so now let's go to the B to C move. The BC leg is the longest in this entire structure and must be at least, so the very minimum, it must be at least the 1.618 extension of the A to B move. So the A to B leg has to be at least the 1.618, but cannot exceed the 2.24 extension. So this is a tight range of the 1.618, and it's the defining element of this structure. So if the minimum 1.618 is not reached, the structure is not considered a valid 5-0 pattern. And now let's get to the most important part, our PRZ, our defining moment here. So the 5-0 pattern utilizes a 50% retracement of the B to C leg as the defining limit in the setup. So a reciprocal ABCD pattern, as we've talked before, completes at this point in the PRZ. In addition, you will find that the A point will come into the PRZ and act as structure. So we get the X to A point and the C to D, they kind of end, the A point and the D point kind of end in the same area. So the A point can actually act as structure and help us support a move higher here. The bearish pattern is just the opposite of the bullish pattern here. And one thing I noticed when I was beginning to trade the 5-0 is that I kind of found it tough to spot in the beginning because it's a very, very different looking pattern. Now, typically, I'm pretty good at spotting M and W shaped patterns, but this is a 5 pattern or a 5-point pattern. So it was a little bit more difficult for me to spot in the beginning. And another weird thing for me was the fact that the X or the B point was outside the X, and the C point sometimes would come all the way to the 0. Okay, but once I define the 0 to X, A to B, B to C, I found the D point to be one of the easier ones to spot and one of the more comfortable trades for me to take, because I felt like I had structure there with the A point. So I would take a little bit of time to memorize what these look like, and especially, go on a demo account and try to find these all over the place and see if you can find the structure to, match what we have outlined, because I think just, being able to see it and being able to recognize it is half the battle here. This PRZ is a little bit different than other patterns that you may have traded or that we've discussed in previous lessons. This PRZ is only defined by two different measures. First is the reciprocal ABCD, and then you also have the 50% BC leg. So the major thing here is the 50% retracement of the B to C. Now this is where we put our limits. This is the defining limit in the pattern. So we would have a trade come in to this pattern, right? And the D point would come down to the 50%, and hopefully it would bounce out of this. Now, the stops and targets in this pattern have never truly been defined. So what I did was I tested it a little bit and found areas that I found to be good stops and targets. So the stop area is below or above, depending on whether you take a long or a short trade, below or above the 618. So we have the 50% BC is our entry. Just beyond the 618 BC would be our stop area. Okay, this allows us to have kind of a tight stop and then let us have a pretty good risk reward ratio when we go for our targets. Now, targets, the way I do it and the way I would recommend is you would close part of your trade at the C point. So now we're going to have to go back and look at the overall pattern, but you would, since we go 0 to X, A to B, or X to A to B, B to C goes up. We're talking about a bullish one here. So B to C would be the longest leg, remember, and then we'd have a little retracement to the D, and then we would potentially be going continued on that long leg. We'd continue the trend of that long leg. So that's why we put it just below the 618. And that's why we would have the C point be our first target, because once we hit that, we take that off just in case we get a double top right there. And then I move my stop to break even and I trail the rest. So I put a trailing stop on the rest. Now, I can't tell you the defined trailing stop because it all depends on whether you trade the hourly, because if you trade in the hourly, maybe your trailing stop is 40 pips. Or if you're trading the daily, maybe your trailing stop is, 150 pips, 200 pips. I mean, it all depends on, how far your stop area was. I like to self-manage it once we get to the trailing. Now, if I leave the computer, I'll put a trailing stop so it's a certain number of pips, but I like to use, higher highs and higher lows, or, lower lows and lower highs, depending on whether we're in an uptrend or downtrend. I like to self-manage it, so I like to stay in the trend. And if we break that trend, then I'm out. Okay, but I'm never going to lose more than my break even if I hit my first target. So we hit our first target, would close at C, our C point, and then the rest would be we'd move our stop up to break even, and then the rest would be, trailed. And I'm going to go through a live example because it's kind of confusing right now, and I understand that because you can't really see what's going on, but I promise I'm going to go through this for you. So let's go through a live market example. Here's what I'll do. I would like for you guys to pause your recording and see if you can spot this pattern. Now, since it's a little bit tougher pattern here, I think it's always good to try to spot it yourself before I explain it. That way you can see if it's something that you can naturally spot or not. Now, just because you couldn't spot it right now doesn't mean you're not going to learn how to do it all, but I think that you should just, that way for the learning process, try to learn it yourself first, and then I'll go through it. So pause it, see if you can find it, and then I'm going to go through this for you. All right, so let's walk through it step by step. Let me just outline it first, and then we're going to go through and check it. Now, if this is what you were guessing, then you got it right. If not, then I'm very sorry, but we're going to learn this, and it's not a big deal. And this is a great looking pattern, by the way. I mean, it's pretty symmetrical. You know, you get this area of confluence with, you know, your former A point and then your D point over here. So let's go through this real quick. I'm going to remove all this stuff. So remove all that stuff, and let's make sure we have the right measurements here. So the first point we have to define is our B point. Now our B point is an extension of our X to A leg, right? So let's see what our extension is here. So we go our X to A, make sure we're extended there. Remember, we can go anywhere from 1.13, which would be right there, all the way to 1618. Now we go, looks like we, you know, the 127 held pretty well right there. So I would consider that a valid area. Now, the longest leg of this reciprocal ABCD, and then we're going to check for the reciprocal ABCD here in a minute. So let's see the reciprocal here, or let's see the. We're going to go to the C point here. Sorry about that. So we're going C. Now the defining element of the C is, remember, we had to have the 1.618 as our minimum. So we have that. We could go all the way to the 2.24. So we're good. We're good on that one. And now we have to define, we need a retracement. Remember, it's the 50% retracement of the B to C. Let's go up here. Boom, right? 50%. Looks like it held beautifully. So we would have got the initial tap. We probably would have entered right there. Kind of got a bounce. Boom. Kind of have a little double bottom. We'd still be in it. And then we, you know, I'll break the mystery for you here in a minute. But okay, so we're good there. So I'm going to draw it again so we can see it as we go through it. Okay, 0 to X, X to A. Let me move that over. X to A to B, B to C, and then C to D. All right, and let me actually put that retracement back up so we can see where our stop's going to be. I gotta move that real quick so I can actually get it in at the right entry. Okay, actually let's check the reciprocal, right? So this is our first leg. Here we have the A to B, and let's see where we would have ended up in our reciprocal. So our reciprocal was pretty close. It would have taken us down below, but that's why we use the 50% retracement as our major thing and the reciprocal as a complementary thing. So it was close enough, but I was already in at the 50. So that's why we don't wait for the reciprocal for confirmation there. So let's do this. Let's imagine I took a long position, right? We're going to take it on this candlestick because that's where I'm entering. Remember, my first target is my C point right there. And I'm going to actually, let me write something there. So this is my C point. That's going to be my first target. So we have defined that area. I'll make that black for you. So my C point is my first target. And remember, my stop, the best for me that I defined was the 618. Now, believe me, if you decide that you want to take a little bit more risk and you want, you know, to go, heck, you can even go below the X point if you wanted to. Go down here and use that as a little bit of support. By all means, do it. But for me, the best risk reward was just below the 618. So I usually cut it in half right there between the 618 and the 707. Sometimes I'll even go down to the 707, but I think it erodes the risk reward a little bit. And for me, the risk reward is more important. Okay, so let's put some rays right here so we can define this, and then I'm going to remove that for you so you can actually see what's going on here. So we have our stop. Let's put that stops in red. Entry is going to be in black. First target is going to be in green. So we rally down into this, right? We get a little bounce. We're still in it. We see it come back to our entry. You know, at this point right here, you're probably freaking out like, oh no, I'm going to cut it short. Well, this is why in any trading strategy, but especially in harmonics, we do not mess with our rules. We follow the rules to the T. If we get stopped out, we get stopped out. But we have to follow our rules because we erode the percentages if we don't. Okay? So you have to follow the rules. You have to be disciplined in this. So when you see it come down in here, you're like, okay, whatever. If I get stopped out, I'm get stopped out. You know, shut off the computer screen if you have to. But then boom, we come right back up into the C point. So I'm taking my first target right there. We're good, right? So I'm moving my stop loss to break even and put a little bit above for the sake of this, right? And my main point that I said was I wanted higher highs and higher lows, right? So we have this higher high, higher low, higher high, higher low, higher high, higher low, higher high, higher low, right? So I could be following this. Boom, higher low. I'm just waiting for it to put in the low, and once it breaks the higher high, then I'm moving it up just below the low. So we broke it, coming back down in, okay, and then we break this higher high, another area, so I'm moving it up. Then we come back down to this, right? We fail, and boom, we finally break. So then, yep, I'm moving it back up, and you notice the C point, how strong of a support level that put in there. That was pretty good because it had, you know, essentially 1, 2, 3, I mean that's a touch, 4, 5 touches and still held. Okay, so we had this the higher high, higher low. And then once we break it, I'm moving it again. And I'm just trailing. This is how you manage a trade right here. You're just trailing it yourself. Okay? You're not doing anything special. This is not hard. Anybody and everybody can do this. Okay? You don't have to be, you know, have a doctorate in economics to follow charts like this. So then boom, higher high, higher low. Once we break this high, boom, that's when I'm moving it. I am not moving it before I break this high right there. Not doing it. Once I break and close above it, and you saw it right there, I'm moving it. So boom, I'm moving it. Okay? So we have a higher high up here. And we let these tops and these bottoms define themselves. I'm not trying to guess where this is at, right? I'm not moving it when I see this low. No, I'm waiting until it breaks this higher high and closes, and then I'm moving it below the low point. So this currently still would be open if you were in this using this trade management, right? So you were having a higher high, you're letting it come down. I mean, maybe we set in a low, maybe we didn't. You know, maybe we are starting a new trend and we're going to have a downtrend. For me, I don't care. I mean, I got in at 130.52, at 136.61. I mean, what do I care? I'm 600 pips in profit on that second position. You know, I'm just letting it manage itself. I'm going to ride this wave until it ends. You know, if this thing wants to go to 2, I'm going to sit here and I'm going to ride it all the way to 2. If it wants to stop me out at 136.61 over here, I mean, what do I care? I'm way in the profit. You know, and my first target, you know, was 200 pips in profit. And if we did a risk reward, my risk here was about 70 pips to about 600. I'm closing in on, if I get another 100 pips, I'm at 10 to 1. I mean, you don't get risk rewards that good. Okay? So we let these run. So I'm going to sit here, I'm going to manage it. Maybe this is the new low. We're going to find out. If it's not, boom. Maybe you were a little bit more aggressive in managing your lows, right? So I put in a high. Now, since this was the high, and then we put in a low, I was not moving it up to the low because we had not broken it yet. But maybe you thought this was your your high and you were way more aggressive, whatever. Maybe you're stopped out. Me, I would have waited for a confirmation for it to close above the high before I moved it up. And I'm not moving it up right now yet. I'm waiting for confirmation. If it comes down and stops me out, then so be it. But that's the way that I would recommend managing your trade and putting your stops and your targets. And you know, you can obviously see that it's a valid trade. So if this is a pattern, if you get through this and this is the pattern you want to trade, then by all means trade it. I think it's a great pattern. It's very harmonic in the sense that you get the reciprocal ABCD, and you get to kind of get in at a trend at a new level per se, at the beginning. And with Elliott wave, we don't know where this is going, but maybe you get the 1, 2, 3, and you took the whole third wave, and people would kill to have the whole third wave. And maybe you're going to manage it well enough to get the whole fifth wave if there's a fifth wave in there. So make sure you practice this before you go to a live trade. I don't think that you should trade this live until you know exactly what you're doing though. After seeing that live setup, let's go through a few key points here. First, the 5-0 pattern utilizes the 50% BC retracement as the defining limit in the setup. So we saw that in that setup there, the 50% was hit of the BC and boom, it took off, right? So that 50% is the main thing. If there's one thing that you learn from this lesson, 50% BC retracement, okay? Second thing, a reciprocal ABCD pattern is typically a shorter counter move of equal length within a longer trend. So they look like a lazy Z or an S. So we showed it earlier. I defined it in the live pattern. You saw that, we use it as a complement. The 50% BC is the main thing, with the ABCD reciprocal being the complement. Okay? And then the BC leg is the longest leg of the structure and must be at least a 1.618 extension of the AB length, but it must not exceed the 2.24. Now, just real quickly, I'll explain why this is. Because if we don't get at least the 1.618, then that 50% retracement is not going to come in near the top of that A point, right? If we have a short extension, say a 127, well, that 50% retracement is not going to come in at the A point, and boom, we're going to break past structure, and we're getting in at a terrible spot. So we want it to be high enough to where we can use that A point as former structure, so as support on a long trade or as resistance on a short trade. Okay, so know these key points, and I promise you'll be able to trade this pattern effectively.